so you made the decision that you need life insurance. And let's be honest, we all need life insurance no matter what age. So I would like to walk you through the process of helping you determine what that amount looks like. Being in this position at one point in time, I can empathize with how puzzling that this can be. And please, if you found this video to be informative and helpful, please like and subscribe so you don't miss any of the new videos that I do put out. So first off, this is one of the most common questions that I get. How much life insurance do I actually need? And the truth is that it's a very simple way to figure that out. It's called the DIME method. I'm going to walk you through it right now so you can get a clear idea of what makes sense for you. So the DIME method, D stands for debt, I stands for income, M stands for mortgage, and E stands for expense. Okay, so we're close to seeing what these rates are going to cost. And in this example, we're going to use someone at the age of 35 who's going to be a male. In the next screen, I'm also going to switch over and show you what the rates are going to be for a female at the age of 35 as well. I chose the state of Texas, and we're going to lock in that rate for a 30-year term. Now, why 30 years? Because we're the age of 35, and 30 years is going to be 65, which is going to be the typical retirement age, and it's going to just end, especially if you outlive it, your beneficiaries won't get anything. But 65 to 70 is a good range to get in a term because that's when typically your assets are going to become liquid and you're about to retire with the 401k or the IOL that you have that you're going to take advantage of. So what is that face amount going to be? We're going to use this calculator here to help us determine. And the D in the DIME model stands for debt. So first we're going to look at your debt. This includes everything like your mortgage, your credit cards, your personal loans, anything that would still be there if something happened to you. The goal here is simple, to make sure your family isn't left responsible for those obligations. So that debt here, we're going to type it in right here. Let's say that you have a house and it's worth $250,000. Okay, so $250,000 right now, the total coverage is that amount. Now I stands for income. So we want to ask, how many years would you want to replace your income for your family? So for example, if you're making $75,000 a year and you want to protect it for 10 years of income, that's $750,000 right there. So here we're going to add in the income, $75,000, and years protected, we're going to give and provide a legacy to our beneficiaries for the next 10 years. Okay, so this is what creates that financial cushion and stability for your family. So next up is M. M stands for mortgage/education. Then we take a look at future expenses, things like college tuition. A good rule of thumb is about $25,000 per year, depending on what your goals are. So if you have kids and you want to make sure that their education is covered, this is where we factor that in. So right here, we said $25,000 a year, and the number of children, let's use the example of 1. Okay. Now E stands for expenses, final plus special needs. So next we need to account for those final expenses. The average funeral cost today is somewhere around $7,000 to $10,000. And then we also look at special financial needs. This could be anything like taking care of aging parents, additional educational costs, or just making sure that your family has extra financial flexibility beyond the basics. This is where we customize things based on your personal situation. So funeral cost, let's add in another $7,000. And for special needs, let's just put that at 0 right now. There's nothing above and beyond that you need to do. And lastly is going to be the current resources. So we're going to subtract what you already have in place. So any current life insurance, saving, liquid assets, we're not trying to overinsure you. We're just making sure that there's going to be no gaps. So for current resources, let's say that we have about $25,000 in current resources that will go against the total coverage needed. And below, adding it all up, the total coverage needed based on how we answered these questions is a little bit over $1 million. So once we go through all that, we're going to actually land on a number that actually makes sense for you, not just a guess. So now I'm going to hit save and continue. And now here on this screen, you see the coverage amount, be that number that we saw there on the calculator. And based on these rates here, I have the top 5 companies, at a 30-year rate, and it's coming at $108 for a little bit over $1 million term. Now, that's going to cost you $108.69 for every single month over the next 30 years. And it's going to provide that death benefit of a little bit over $1 million. Now, what this shot out was some of the top companies, and the cheapest company is going to be $108.69. But what this is saying here is that Banner Life is going to be one of the best fit ratings because it's going to be possibly an instant approval or an accelerated process. So an instant approval process for Banner Life, it's stating that could almost take about 10 minutes. An accelerated version of this would be about 20 days. Just to take a look at some of the other companies that are going to be offered, Pacific Life, Lincoln, and this product here has accelerated benefits, meaning living benefits that you could participate in. Corbridge is coming back at $108, and North American is going to be sitting at $150. So it's quite interesting that now we have a range from 109, or really 108.69, all the way to $150. Typically, I like to go with Banner Life because it has a very fast approval process. Now, this shot out a rating of a standard plus. If we take a look at the preferred plus ratings, that's going to be significantly different because it's 2 classes below. So preferred plus rating is going to be $66.99, Pacific Life $67.45, Lincoln $75.34, and North American at $73.32. And the other additional Lincoln product is going to be $81.57. And then Corbridge, formerly AIG, is going to be $67.03. Right. So if there's a few prescriptions, typically you're going to be able to qualify for that preferred plus, and I would still go with Banner Life because they have that instant/accelerated process. Now, I also said that I wanted to show you what the rates were going to be for a female. So I'm going to hit this little pencil here and change the rate, the gender from male to female. I'm going to hit save. And now let's take a look at these prices. So when everybody's younger, for females, typically that rate is going to be a little bit less than what a male would be. So those rates are not going to be $66 for Banner Life. It's going to be $53.66. Pacific Life, $53.90. Lincoln, $58.66 and $64.78. And North American to be $61.90. And Corbridge to be $53.55. So let's say that we're happy with the Banner Life rate of $53.66 locked in for 30 years at a coverage amount of a little bit over $1 million. So now we want to go ahead and apply. So what we would do is hit the apply button, and it's going to start an e-ticket, which an e-ticket is going to be where I'm going to collect some basic information, and now we're going to start that application process. So from here, if you decide to move forward, this process is very straightforward. We'll submit an application, and you'll receive an email to review and confirm your information. That email will verify your identity. Once you approve it, I'll sign it on my end, and it will get submitted to the underwriters. Now, here's an underwriting explanation. So that's when the process officially begins. Now, depending on the type of policy and your situation, there may be a few additional steps, but not always. So some possible next steps: keep calm and reassuring, because in this example, you might answer a few follow-up questions by email, have a quick phone call with an underwriter. They may request medical records if needed, and in some case, a nurse will come out to your home for a simple blood test. Again, not all of this happens every time, but it's part of making sure that you're getting the right coverage at the best rate. So the most important thing to understand is that you're not going to do this alone. Okay, I'm going to guide you through this entire process, making sure everything is handled correctly and as smoothly as possible. If you ever wondered how much life insurance you actually need, now you've got a framework and I'm here to help. Thanks for listening.